Seth, we're going to go straight to the Capitol Exchange and listen in to Larry Kudlow being interviewed by Kelly Evans.
Okay.
Stronger than ever.
Even brought some notes with me. I have to fulfill Tyler's mandate.
How many days has it been in the White House now? How long, Larry?
I think I'm here almost a year and a half.
Wow.
Yeah, time flies when you're having fun. And I will say, this is the most wonderful job I've ever had. It's a great honor. It's a great blessing. And we get involved in everything. National Economic Council is a heck of an operation. It's probably a bigger job than I realized when I first took it. But I'm very proud of the policies. We'll talk about that in a few moments. But yeah, a year and a half, and it's quite remarkable. And I guess, you know, in terms of the old CNBC duties and so forth, one of the things for me that's been an eye-opener is so much international work. National Economic Council, NEC, has a section which we share with the NSC, John Bolton, who was a very old and dear friend going back to Reagan days. And so I've been heavily involved in national security and especially trade.
Wow.
Trade's been the big one.
So before we get into all of that, the very first thing I want to ask you, Larry, is after the strong jobs report on Friday.
Yes.
Great jobs report. Much, 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 much stronger than expected. How can the Federal Reserve still cut interest rates at the end of the month, which the market seems to expect and which the president is still calling for?
Well, look, I think, Tyler knows, and others, one of my credos down through the years and decades is that rapid growth, low unemployment, solid job creation does not cause inflation. Does not cause inflation. And the so-called Phillips curve has been dead for a very long time. So in terms of what you're asking, fair enough, but I would say you should be looking at the price indicators, not the job indicators.
And we'll get that this week again.
And yeah, I mean, you've got your reported PCE deflator, and we're going to get, I guess, a CPI number this week, if that's right. In the market, I think watching price signals is a better approach to the Fed. Now, look, this is an analytic. I'm not here to bash the Fed, and I respect their independence. And Jay Powell is a friend. We have lunch every month. Richard Claret is an old friend, and so forth and so on. They'll do what they're going to do. I'll just put that aside for a minute. I'm just saying analytically. So I look at things like the inverted yield curve, which I find somewhat troubling, and I think is a signal to the Fed. If anything, it's a deflationary signal. I think just something like the 5-year break-evens. There's a lot of jargon here, but I think this audience understands that jargon. The 5-year break-evens in the TIPS market are running at like 1.5%, which is the CPI break-even. PCE deflated, that would probably be about 1.25% or less. As you know, their target is 2%. And actually, when goods prices are by and large deflating, commodity indexes have been sloping lower for quite some time. So I'm just saying, on that basis, watching price signals, not jobs, there is room for them to, as I've said, take back the December hike.
Sure, but what about those people who say they only have, what's the number, 8 cuts to give? Why give one now? The stock market's at all-time highs. Unemployment is at all-time lows. Does it seem like it's really that urgent right now?
Well, look, again, I would say they ought to stay with their price targeting. They ought to throw away their Phillips curve. They ought to give long vacations to senior board staff who run those Phillips curve models.
But what you're saying
I also think...
Go ahead, yeah.
With respect to the world economy, perhaps we'll touch on that later, and these very low interest rates in the marketplace, not just the target rate. I don't have a problem with an insurance policy, and I think that's something to consider. I also think, Kelly, We've had very good wage gains overall, whatever, 3.1% last 12 months, I think. But when you dig into that, things like non-supervisor workers, manufacturing, it's actually higher than that. I was at the beautiful dinner last night, hosted by my friend Stephen Mnuchin in the Treasury Department in the old cash room. You had about 100 people plus, including POTUS, in honor of the Sultan of Brunei. Anyway, my point is there are a lot of CEOs there who were talking about how strong wages are. But the workforce is earning it because the productivity rates got back to about 2.5% yearly. So all that's fine. So you could take out an insurance policy. But again, the price signals suggest, as they have all year, going back to last autumn, that that last policy move in December was unnecessary, and I think they could take it back, call it insurance. I call it price level watching. But I don't, it's funny, try as I might, for so many years, in so many ways, in so many shows, in so many interviews, in so many commentaries, price level stability at a steady dollar is what the Fed should aim for, in my view. Again, this is an analytic. I'm not here to proselytize the Fed. Not employment. I mean, I knew, it's great, when the jobs number bunched up, as you said, and beat all the expectations, which made the president very happy when he gave him the news, made me very happy. I love people working. More people working is joyous. July 4th weekend, it was a fabulous number. Pursuit was life, liberty, and the pursuit of happiness is being fulfilled in America. And by the way, life, liberty, and the pursuit of happiness is not inflationary, should not be crushed by central banks. So I just discard all that stuff.
So if Fed Chair Powell, and you alluded to this, but your point of view on this is very different from kind of the Fed orthodoxy that a lot of the academics and a lot of the economists out there have.
But
so is
Kelly,
the president going to say that he wants somebody as Fed chair, perhaps with your support on this issue, who sees the world and understands the world that way and not Powell? So what kind of discussions have there been about saying, you know what, Powell gets put into a different position, someone else gets elevated? The jockeying, Larry, in public is pretty clear. The way that other members of the Fed are out there with their, points of view or their dissent, they are clearly messaging to the president, hey, if you're looking for someone else to do this job, I'll do it.
Well, that's an interesting last point you make there. I've been leading the search, the selection for the 2 open seats on the board, and I think you're quite right. There's no shortage of candidates. You're absolutely quite right. One outstanding candidate was quite interested, but he's already running a Federal Reserve Bank, and he wondered if he could be a governor and continue to be the president of a reserve bank.
Are you talking about the Bank of England or the European Central Bank?
I'll never say, but it was, I had to exercise some executive guidance to say I didn't think that was really going to happen.
Could someone like Mario Draghi be our Fed chair? Is there any reason why not?
Do you have to be a citizen?
I'm asking you.
It's a delicate point nowadays. He would, is ECB, where is it? Frankfurt? Brussels? I don't know.
Frankfurt?
Frankfurt. So
you've got Mark Carney. He's apparently might be elevated to the IMF, leaving the Bank of England, but I don't know if the president feels as warmly about his tenure as about Draghi's.
We could probably, I'm not sure where you're going, but we could probably give him green cards. I don't know if that'll work. That was a joke. Just kidding. I don't know Mr. Draghi. I do know Mr. Carney. My statement doesn't necessarily mean overseas, but I will simply say that to your other point, I think the Fed, and I think the new management at the Fed in the last year or so, is not so far from the view that I'm expressing. I think that Chairman Jay Powell and Vice Chair Richard Clarida in their public speeches, expressed a lot of skepticism about the models to which you're referring. A lot of skepticism. Now, I know some of those messages are mixed, and you've probably got lots of brilliant Fed watchers out here, but if you read carefully and listen carefully, and I guess Jay will be in front of Congress this week, and we'll hear some more, but they're having a lot of questions about some of these, what should the unemployment be? What should P star be? What should R star be? What is the right neutral rate? So I'm not so sure that the view I've expressed on price signals or the views the president has expressed is necessarily so far from where the Fed is.
So Jay Powell's job is safe?
Yes, I believe it is. I will say that. There is no effort to remove him. I will say that unequivocally at the present time. Yes, he's safe.
When Art Laffer has been saying that monetary policy should be accountable to people the same way that any other kind of policy is, especially through the executive branch, when he says that maybe the Fed shouldn't be independent because then it can't be accountable to voters, is he right?
I haven't talked to Art. I read some reports about his recent interviews. He just won the Medal of Freedom, Presidential Medal of Freedom, which is fabulous. Great. He's such a distinguished person. And it's no surprise, not breaking news, but he's a very dear friend of mine, and he's a mentor. I haven't really had a chance. I better call him today and find out what exactly he's telling all of us on this point. Let me say, I personally believe the Fed should be independent. But that word independent, it doesn't mean they operate from another planet. And as Arthur said, the Fed reports to Congress, and that's in the Constitution, and the Fed is appointed, or the governors are appointed by the president. So I think in a day-to-day sense, certainly they're independent, but that doesn't mean that they shouldn't listen to advice from their elders, if you will. I think that's what Art's saying. I'm not 100% sure. I'll leave him to clarify that.
He just says, why should monetary policy, this very powerful tool to control the economy, not be subjected to democracy just like every other instrument of government? It should be controlled by the president, by the legislative and executive branches, but it's not.
Well, I think that's an interesting point of view. I think that's a good point of view. It is a democracy. As I said, the president appoints the governors, and they report to Congress. Congress has, if you want to get constitutional, Congress has the authority to set the value of money. You don't hear much talk about that nowadays. And throughout American history, whole presidential elections have been fought over the value of money, tying it to gold or silver or some such. So, Art would be right. I'm not sure operationally what that means. Let me just say, in an operational sense, in a traditional sense, I support Fed independence.
As you can tell, we have been watching National Economic Council Director Larry Kudlow speaking with our Kelly Evans at CNBC's Capital Exchange event in Washington.